It is so traumatizing as a beginner to keep losing trades back to back with almost zero profit or even blowing out your account. So in this video, I will teach you a simple technical analysis strategy for you to start making profit also. This strategy can be used on any financial instrument, be it stock, currency, bond, commodity, etc., etc. So stay tuned. Immediately after our intro, we'll dive straight into the main points. As a beginner trader, the first thing you want to know is how to identify and mark out your key levels and some simple technical analysis strategy to start making profit and minimize loss. If this is your challenge, then don't worry, I am here to guide you step by step to better understand how pure technical analysis work without the use of any indicators. So firstly, what are these key levels? Key levels are important price levels on a chart that shows where price might find support and resistance. Most traders believe history repeats itself, and that is why they marked out their key levels to guide their future trading. Now let me give you some of the topics we will be covering in this video. 1. How to identify our key levels. How to plot out those key levels easily. How to identify the major support and resistance zone. And then finally, a simple strategy to start using if you want to start seeing positive trading results. Then at the end of this video, I will give you bonus tip to maximize profit, and I will advise you not to skip any part of this video for better understanding. Please, if you are new to this channel and have not yet subscribed, kindly smash the subscribe button, give us a like, and share this video so that others will benefit. This will also encourage us to keep doing new free videos for you. So let's move straight into the main thing. We are using XAUUSD to practice this strategy, right? You can use any currency pair, like I said from the beginning of this video, and you can mark out your zone. It is advisable to mark out your zone from a higher time frame, probably from the weekly or daily time frame. So I will be marking out my zone from the weekly time frame. So we'll be marking out our swing highs and lows in this weekly time frame. Then after marking out the zones, we'll step down to probably a daily time frame to mark out more zones, and to either 4 hour to mark out more zones until we finish marking out our zone. Then we will know where to take our trade entries. So let's mark out these zones quickly. I can see there are touches here, and in the weekly time frame, I always advise you to mark out your zones from the week, including the week. Don't mark it like this. Always put it from the week, just like this. So if you notice, you will see that there are multiple touch around this side. You see, we have like almost 3 touches around this side. Sorry. We have up to 3 touches around the side, even more than 3 touches. We have up to 4 touches around the side. So let's mark out our zones first before we come to this. I can see here also is a zone. You see, you can see we have swing highs and lows around. So we'll be marking out our swing highs and our swing lows. Just any swing high we see, you can see, we'll mark them out. Let me take this off. Okay, let's mark more. Let's mark more. Don't forget to put it at the tip of your trend line. We can readjust it. On a lower time frame if we want. We can readjust it on a lower time frame if we want. So you can see this marking out of zone is not something that is difficult. It is not something that is difficult. There is a zone here. There's a zone here. There's a zone here. We have like 2 zones here. So if I mark this zone, definitely it must have reacted in the past. If you scroll back, you see that it must have reacted in the past. So I will mark that zone. Let me scroll back for you to see. You see it has reacted in the past. So we can mark as much as we can. We can mark as much as we can. Let me shift this a bit. You can shift to this side because we can see here was on a downtrend. So you can mark even on this side if you want to mark multiple zones. You can mark even here, mark here, mark here. Just keep marking, and as much as you can, but just make sure you don't over mark it so that your chart won't look too messy. So we'll move to a daily time frame to mark more zones. Can move to daily time frame to mark more zones. Let's move to daily time frame to mark more zones. So here we're on the daily time frame. You can see we have more zones on the daily time frame. So let's say we want to use a different color in marking out our daily time frame zone. Since the weekly we used green, we can use just any color of our choice. Let's say we use blue. So we know that, okay, once we see blue, we know that this reaction is coming from the daily zone. So on the daily zone also, if you want to mark, you can also include the week. You can also include the week while marking out your zones. Just make sure you mark out any visible zone you see. Just any visible zone you see that has at least multiple touches. You can see there are touches around this side and this. And you can see we have another zone almost around this side. So you can just play around it, and because you'll be marking more zones in a lower time frame, so that will also help you to make the right decisions while taking trades. So you can see that on the weekly time frame that we marked these zones, some of them are kind of a bit up. You can adjust it if you feel like once you get to the daily time frame, you can just readjust it. You can just readjust it to suit. The most important thing is marking that zone. That's the most important thing. The most important thing is that you marked out your zone. So we have marked some few zones on our daily time frame. Now we'll be moving to 4-hour time frame or 1-hour time frame. So let's move to our 4-hour time frame to see more zones. So this is how our 4-hour time frame look like, right? This is how our 4-hour time frame look like. You can see some reactions here which must have reacted in the past. All this one, if you notice, there was nothing here. This side is blank. You see here is blank, right? So, but that does not mean that the market has not reacted in the past. So it is advisable to also also mark out these zones you see here, because if we check back, you will notice that it has reacted in the past. So let's mark out these zones. As we say, let's change the 4-hour time frame color. Probably we can use this color for it. So let's mark out our highs and our lows. As we said, let's mark out our highs and our lows. Please, if you are a beginner trader and you really want to learn, you have to follow these steps gradually. You don't need to skip this video, because you won't skip it and start asking me questions on the comment section when I already explained it on the video. So please watch this video carefully so that you will understand how this works. You can see why I'm marking out this side is because this market must have definitely reacted in the past. And if you notice, I was not really concentrating on the weeks again, because I'm stepping down to a more lower time frame. Before we started with the weekly, before moving to daily. So now we are in 4 hours. So if you like, you might not really need the week while marking out your zones. So let's mark this out. Let me scroll back to previous market reaction. You see those zones we marked with the purple color, right? Sorry, the orange color. You can see that market has reacted to these places. So that is why we marked those ones too. So you won't say that, okay, I don't want to mark this because I don't know if the market has reacted. Just mark whatever you want to mark. You see, you can see market has reacted to those places before. So we are doing this because we want to see how we'll take trades in future, because we want to see how we'll take advantage of the trades in the future, right? That is why we are marking these zones, right? So now we have finished marking out our 4-hour time frame zones. So we'll move down up to we'll move down to probably the 1 hour also, and mark out more zones depending on the kind of trader you are. If you are a swing trader, I would say from your monthly, you start marking your zones from your monthly, weekly, and probably 4 hour, and take your entries either from the 1 hour or 4 hour. But if you are a day trader, you should mark your zones down to as low as, if you want, 30 minutes, 1 hour, and you can take your entries from either 15 minutes or 5 minutes as a day trader. You get, if you are a scalper, you can also mark it as low to as 5 minutes. You can mark it to as low as 5 minutes and take your entries from either 1 minute or 5 minutes or 5 minutes. But I advise you always take your entries from 5 minutes though. But you can also take your entries from 1 minute to, if you want to quickly catch the market. Sometimes there are noises on that 1 minute. That's why I always advise people to not take trade from there, because sometimes you see a noise and a candlestick might form and might really not the candlestick form. There are rules in reading the candlestick formations, right? So a candlestick might form, and maybe a dodgy candlestick might form, and you might want to, or a pullback candlestick might form. You might want to use that to trade in the 1 minute time frame, and you end up taking the wrong entry because it was a fake one, and probably it didn't respect the 1 minute. But that's why I advise you start from the 5 minutes to 15 minutes if you want to take your entries. So now on the 1 hour chart, we want to mark out more zones. We want to mark out more zones. Let's mark out more zones as much as we can. Let's mark out more zones as much as we can. Please, let's mark out more zones as much as we can. Mark out more zones as much as we can. So you can decide to also go to a 30-minute time frame to mark out more zones if you feel like. You can decide to go to your 30-minute time frame to mark out more zones if you feel like, but you can leave it this way if you don't want to mark out more zones. All will work perfectly if you're taking your entry from the 15-minute time frame, right? So now we have finished marking out our zones. Good. So now we'll check if we have a support and resistance here. You get a major support and resistance here. Let's check if we have a major support and resistance here. Wow, this is how those zones. Okay, we can hide the other ones so that it doesn't really jump pack like this. If we go to the lower time frame, we can actually hide these ones so that it doesn't show on your weekly time frame. You can make it visible from, if it is a 1 hour line, you can make it visible from 1 hour to below so that it doesn't jump pack like this and show because it's just too much on the screen. So this is a weekly time frame. Now you can see that this place is a major resistance zone. You see? And if you notice, I am marking this zone and including the week. You get? So now, and if you check down, you will see that we have a kind of support zone here also. We have a kind of support zone here also. You see, this one has the wicks inside. So how will this valley? This valley is when the wick touches here or inside it. Sometimes we do have fake breakout, but as soon as this breaks out and closes, a candlestick closes above these, we'll say, okay, this resistance is no longer valid. If it breaks below here, this side, let me use if it breaks below this side, then we'll say this support is no longer valid. And if the market comes to this side like this, then this support will become our resistance. So now let's move back to our lower time frame. To start taking our entries, right? We said we'll start taking our entries from the 15-minute time frame. So also, I want to let you know that on the support and resistance stuff, you can also use your trend line. A support and resistance must not be drawn. You must not say you want to use only this box to identify your support and resistance, because what if the market is in a trending market? You get? Because right here, I will call this a ranging market because it was just sideways, right? So, but what if it is a trending market like this? You can actually use your trend line and draw your support and resistance also. You can actually use your trend line to draw your support and resistance also, so that you can get your entries. You can see that there are touches here on this trend line, and here also you can see there are some touches here. So this will serve as your support, this particular trend line, and another trend line, you draw another trend line here to serve as your resistance. This will serve as your resistance. This will serve as your resistance, right? So this is how this work. You get? So if you want to use the support and resistance level to trade and your key levels to trade, so I'll give you a simple strategy to use. Like I promised from the beginning of this video, that I will teach you a simple strategy. You don't just jump into the market blindly, right? So we have a rule we set. If you are one of our old subscriber or one of our students, there are rules we set for our students to take entries, especially our beginner students, our beginner traders. There are rules we set for taking entries. If those conditions are not met, we won't take the trade. If those conditions are not met, we won't take the trade. So what are these conditions? I call it sets. I call it sets. The sets. These are my conditions. This, I call it a set. I don't know why this is not. It's not. Okay. I call it the sets. These are the conditions. These conditions must be met before you take any trade. Once you see that these conditions are met, then that trade is valid. So what is the S here? This particular S, what is this S? So this this S, I refer it to be my my market setup, right? This is my market setup. What I do first is to study the market, right? I study the market. You have to study the market. The first thing you do once you get to your chart, study the market, know the overall trend of the market. How is the market reacting? How is this market reacting? After you study this market, what will you do? You mark out your zones. You mark out your zones. This will be part of studying the market. You get, just like we did now, we marked out our zones starting from the higher time frame down to a lower time frame, right? So after marking out our zones, what is the next thing? Is this E. And what exactly is this E? We'll start looking for entry. We'll start looking for entry, right? So now, after looking for entry, what is our next step? Our next step is our take profit, which stands for the T. Our take profit, right? Which stands for the T. So then after that, the next one is our stop loss. So now, before entering a trade, make sure these conditions are met. The set condition, have it at the back of your mind that, okay, after studying the market, you look for your entry position, then you put your take profit, then your stop loss, right? So now, let's look for an entry position, because we are done with the first step. We are done with this, with the S, right? We are done with the S now. So we are looking for E right away. So let's look for E right away. So let's say you came into this market around this place. You came into the market just around the side, and you notice that a candlestick has closed just above your line, your psychological line, this line you drew here. A candlestick has closed, and you have checked that the major trend is a buy market, right? So we always want to follow the major trend. If the major trend is a sell market, as a beginner trader, please, I'll advise you to stick to this strategy. Always follow the trend, please. The trend is your friend. Yes, the trend is your friend. So make sure you check the major trend and only take trades that are on the major trend. If the major trend is a buy, please always take trades that are on buy. Avoid the sell. Even if you see an opportunity on the sell side, just avoid it as a beginner trader, so you don't lose your money, right? So now, let's say you come into this market on this side, and our rule is that a candlestick must close above our psychological line or our levels, the levels we drew. So we want to take this trade. We'll be taking this trade just right here. And now, where would we set our take profit? So we'll have an entry point, right? Where would we set our take profit, which is the thing? Our take profits should be around the next level. Our take profit should always be around the next level, except if you want to take partial profit on the first level and another partial profit and your final profit at this level. So you can take your first profit here, your first TP here, and your second TP around the side. So now, where would we set our stop loss? Since we are taking a buy market, our stop loss, which is the S, this particular S, right? Our stop loss will be set just below this side. Just below this side will be our stop loss. So because this market can decide to turn back like this. This market can decide to turn back, so our stop loss will take care of that. Immediately this market turns back, our stop loss will take care of that and take us out of the market, which will minimize our loss. Stop loss is very, very important while trading. Please take note of this. Always put your stop loss. Stop thinking that if I didn't put my stop loss, if I put my stop loss, it will hit me. When you don't have rule, why won't your trade keep going to take your stop loss? Because you don't have rule. But if you have a strategy, a working strategy that you are following, not jumping from one strategy to another, look for a strategy that works perfectly for you and stick to it. That is how forex trading works. So let's say this, you want to use this particular strategy, your stop loss would be just below here. And your take profit, we said, can be take profit 1 and take profit 2. Or you can just take out your profit just here and you are done for the trade and you look for another better opportunity, right? So now let's go to the support and resistance zone so you can see this for yourself. Probably I will just clear out all these drawings so that you see the mark, you see what I am trying to say easily. So this look more better, right? This look more better. This looks more better. This looks more better. So this looks more better, right? So we can see that there are multiple touches. You see? You see? We have multiple touches here on the resistance zone. We have multiple touches on the resistance zone. And on the support zone, we have how many touches? We have 1, we have 2, we have 3, right? So because our major trend is a buy market, that is why we have more touches on the resistance zone. You get, that is why we have more touches on the resistance zone, and that is why we're able to see a breakout on this resistance zone. You can see a breakout. This is a breakout. This place is a breakout. This broke out of our zone. So this gives us strong belief that this market is going further. You get, this market is an uptrend, and that is why I advise you to always take a buy when you notice that the market is an uptrend. So how will you trade this strategy? We said our set condition must be met, right? The set condition must be met before we take take the trade. So we have analyzed that, we've studied the market, which is the S, that the market is uptrend. So now we are looking for an entry position, right? So if you are entering for this market, let's say you are a swing trader, you will be entering just right here, right? You'll be entering just right here, and your take profit would be on your next resistance level. Your take profit will be just on your next resistance level, and your stop loss, which is the S, will be just below this side. Your stop loss will be just below this side, right? So now this is how this work. If you want to use the trend line on, like I told you, that you can also use your trend line. If this market is in a trending market, if this market is in a trending market, your trend line can also serve as your support and resistance, right? So because you know that this market is an upward trend, you will only be taking trades once this market gets to this your zone, right? These are your conditions because you have already studied the market, so you will only be taking trades while this market get to this zone. And you notice that a candlestick has closed above here, and you see some pullback candles which confirm that yes, this market is really going up. You can see a pullback candle here. This particular candle is a pullback candle. So this signifies that okay, yes, this market is really going up, and you can see that there are engulfing candles. You see these two momentum candles, this one and this particular one, this green one. So these are momentum candles showing that the buyers are very strong in the market. So this would be your entry point, and your take profit should be just above here. Your take profit should be just above here. Your take profit will be here. You see this place will be your take profit, and this place will be your take profit, and your stop loss would be just below here. Your stop loss will be just below here. So if you are a swing trader, please follow this rule to maximize your profits and minimize your loss. Please always remember the set rule. Always remember the set rules before using this. So next, after this, I will show you a strategy where you can also use your Fibonacci to draw out some of your levels, and to have idea on where to enter the market and when to get out of the market. So now, how would you use your Fibonacci to achieve this? So let me take out these drawings, and let's probably move. If you are a swing trader, you know what to do. You can draw it. You can draw your Fibonacci for here, but let's go for the day traders, please. If you're a swing trader, you'll be drawing your Fibonacci from the higher level. Then on the support and resistance I just did now, I talked about swing traders taking and drawing it here. The day traders can do theirs on a lower time frame. It works on even lower time frame. Support and resistance also work on lower time frame also. So now for the Fibonacci, let's probably use Fibonacci. Also works on any time frame, please. You can use any time frame on Fibonacci, right? So now we notice that this market was a kind of somehow, you can see you can pick your Fibonacci from the moment a trend change. You can pick your Fibonacci from the moment a trend change, and you can also place it anywhere. It doesn't really matter. What really matters are the levels. You get what really matters are the levels. This one is a bonus tip I'm giving you. If you don't want to probably use the level, you just you can use the Fibonacci to do that. So now let's plot our Fibonacci retracement tool. Let's plot our Fibonacci retracement tool. I want to take it from this low. I want to take it from this low. You can take it from anywhere actually, but I want to take it from this low to this high. So what you would do is that you will keep extending your Fibonacci. You know, the Fibonacci rule also believes that history repeats itself, right? So this will serve as your support and resistance, can also serve as your support and resistance zones, and also give you entry ideas as to when to enter a trade and when to exit a trade. So, and if you check very well, you will see the Fibonacci came with a trend line. This particular straight line is a trend line, so which is also serving as our support here, right? This trend line is serving as our support here, and you can see that this also is reacting to each of our levels. You can see the market reacted to each of our levels, right? You can see how this market is reacting to each of our levels. So because we know that, okay, the market, the major market is in an uptrend, ignore this long red candle you see. This might be as a result of news. Please, if there is news, try to avoid the market, because sometimes technical analysis might not work on news. If the news come out positive or negative, this will go against your plan. So you might want to just avoid news period. Always check your economic calendar to see if you have any upcoming news. Then you just stay off the market around the news period and trade when you know that the market is free, right? You only trade once you know that this market is free. So now, if you want to go by this FIB strategy, you will be taking your trades on the touch of these levels. You can see, we know that, okay, the major trend is a buy trend. So once this comes to, you can see this market has been reacting to this, especially our 32 level. It first of all reacted to this 61 level, then to the 50 level, then to the 38 level, then to this 23 level. You see, so each time it comes to, your market comes to each of these level, and you have seen a kind of engulfing candlestick, it shows that, okay, this market will definitely go up, because you know that the major trend is a buy market. So you might want to, after plotting out your fib, you might want to go, sorry, let me delete this. You might want to go to a lower time frame to take your entry, so that you will see the market properly. Okay, we plotted this on the 1 hour time frame, right? So you might want to either go to your 30-minute or your 15-minute time frame to take sniper entries, to take the entry the right time. You see, you can see how this is working out perfectly. You see all the zones, you see. So this will give us more clearer insight of the market. If you check very well, it's either you see an engulfing candle, this long big momentum candle, or you see a pullback candle and multiple rejections around those zones. You can see multiple rejection candles around those zones, or you see a big engulfing candle just like this green candle. So this will give you insight that, okay, this market is reacting to this zone. See multiple rejection candles here. You see multiple rejection candles around this side. You see how it has been ranging around this side for long. So this is giving you idea that, okay, this market is likely going to bounce back after you see your what's it called, your maybe engulfing candlestick or your pullback candles. And also another thing I would like to let you know is you notice there is a double button around the side. Also you notice that there's a double button around the side, so we're expecting this market to go further up. We're expecting this market to go further up with this strategy. So now, if we want to anticipate that, okay, this market will go further than this, what do we do in this situation? Is for you to pull out your Fibonacci extension so you will know the next expected place you think this market will go, right? So if as a beginner trader you see this pullback, you see this red candlestick coming down, since you know the major trend is buy market, you might just want to avoid it. But if you say, okay, you want to really take this trade, I will show you what to do about that. If you really want to scalp here, but I will advise you as a beginner, just stick to your buy. Let's do the fib extension first. Let's get the fib extension. This is the fib extension. So now you will be plotting this from where we plotted our fib retracement. So you start from the low, the swing low, down. We plotted it to this high, right? So now we plotted it to this high. After you put it, then you put it around the side. So now we are expecting this market to go further to this next level. This is our expected level where we think this market will go next, right? This is our expected level where we think this market will go next, and this is the expected next level we think it will go back to this side. So if I want to take this particular trade, I might want, because I can see that a candlestick has broken through this level, though it has not yet closed. I'll wait for this candlestick to close before making decision. Okay, this candlestick, maybe if it closed below here, then definitely this market is coming to this side. So please don't just jump into the market. You have to see the candlestick reactions, please. You have to wait and see the candlestick reactions before you take a trade. So if this market eventually comes to this place, I'll also not just take the trade immediately. I'll also wait to see that this market did not break through this side. This market did not break through this side to this side. You get, if I see that this market touches this zone and pull back, and I see a pullback and an engulfing candle from this side, this will give me the confidence that, okay, this market is definitely going up. And or I see some multiple rejection candles, or I see some multiple rejection candles here. Okay, I believe that, okay, after these multiple rejection candles, immediately I see a pullback candle or an engulfing candle, then I will take a buy position. And if I'm taking a buy position, mind you, this is live trading for gold. So if I'm taking a buy position, then I'll be taking my not to forget your sets rule. I have my S net, which is studying the market. I have my entry level already, and the T, which is my take profit. My take profit, I can put my take profit around the side. If you like, you can say you want to go out here, but the market is definitely coming to this place. This I can assure you. The market is definitely coming to this place. So this can be your take profit 1, and this can be your take profit 2. And if you want to go further, this can be your take profit 3. So you see how this work, right? You see how this work. This is how this strategy work. So if, for example, you want to take a sell market, if you are an experienced trader, please, I said, don't take a trade if the major trade is a buy market. If you are not an experienced trader, if you are a beginner trader, please just stick to the trend. Be patient. The opportunity will come for you to take another opportunity, another trade. You get, there is always opportunity in the market. But if you're an experienced trader and you're watching this video, you want to take a trade, you can move to you can delete all this and plot your fib, or after plotting your fib, you notice that okay, this market has started coming down here. There's this big engulfing candlestick that closes just below this place. So this gives me assurance that okay, this market will definitely come to this next level. So I'll just take a quick scalp to this level. I'll take a quick scalp to this level. Remember, you can just scalp because you can't predict the market when the major trend is a buy. That's just it. When the major trend is a buy, you cannot really predict the market, except if the market wants to change direction. But if this market doesn't want to change direction, and you know that the major trend is a buy market, I'll advise you to just stick to your buy market, right? I'll advise you to just stick to your buy market. Currently, I'll also be taking a trade on this, and probably I might drop it at the end of this video, or I might do a new video on that showing you the outcome of the trade. So with this, I believe you have picked some things out of this video, and please, if you are yet to subscribe to this channel, kindly hit the subscribe button now, like this video, also share these videos so that others can benefit. A lot of people don't know this simple strategy. They keep jumping from one video to another and keep blowing their account when there are simple strategies to follow and become profitable. And the major goal of this video is the beginner traders that don't have a working strategy and have been losing a lot of money. So if you are able to follow this strategy gently and watch this video fully, even if you don't understand, rewatch the video please and take notes. Rewatch the video and take notes, then apply the strategy. You can try it on your demo account. I'm not saying you should go straight in and start using it on your live account. You can try this on your demo account, practice it on your demo account for some time, and before you start using it on your live account. I'll also drop a link on this video for you to register with licensed broker I have been using for years, and I've been benefiting from them a lot. And I also drop a code where if you register with them with this link, immediately you do your first deposit. Please, while you register, you use my code, which is AFTECHTRADE. I'll drop it on the screen right now, which is AFTECHTRADE. Use the code as your registration code. This will give you 100% instant bonus on your first deposit. Please, this will give you 100% instant bonus on your first deposit. And continuously, if you want more bonuses, you can activate them manually. You can activate them manually with just this link. So I'll drop the link on the comment section for you to register with this broker. Thank you for watching this video. Then kindly tell us another topic you want us to discuss, and drop your comments on the comment section of this video. Like this video, subscribe if you have not yet subscribed. I have a lot of people that comes here on a daily basis to watch my video and have not yet subscribed. Please, subscription is completely free. Click on the subscribe button right now. Turn on your bell notification so that anytime I drop any video, you will be the first person to be notified. Please, we also have our channel membership that you can also go through and register with anyone you want. Just go straight to our profile, to this page profile, and click on join, then select anyone you want. Thank you and peace out.